Let me just begin the discussion by asking this. Is part of the bet here, if you are inclined to bet on IBM, that Krishna, the new CEO, can be to IBM what Satya Nadella has been to Microsoft?
Yes, I think there are a lot of investors who are making that leap, saying we have a technologist who was not that well known to the street coming in and replacing a business person, and the parallels are really significant here. And certainly at that high level, they are. I would caution, however, that we are, much later in the cloud game than when Satya took over at Microsoft. But also the portfolios are really different, and that is an important thing that investors have to recognize, that migrating from an application software company that to the cloud is far easier than moving from an infrastructure software company and hardware company to the cloud. And that has been a really significant challenge for IBM. Yes, they could have been much more deliberate. Yes, much of the money that was returned to shareholders in hindsight should have been redirected in other areas. But the cards that they are dealt with are intrinsically much tougher as a portfolio to migrate to cloud businesses than what someone like a Microsoft had. IBM is much more analogous to Oracle's infrastructure business, which has really struggled in the cloud migration as well.
So the parallel is inviting, but the circumstances are so different that it only goes so far. Josh, jump in.
Hey, Tony, I wanted to ask you this question. I have this personal opinion, just pure gut instinct, that one of the turning points for Microsoft, obviously the new CEO and the aggressive move toward cloud, but just this idea of getting actual technology into the consumer's hands again, which is something that Microsoft hadn't done. I think the Surface was very important for visibility. I think the stores in grade A shopping malls were also important. Even if they're not the primary driver of earnings, I think that was essential for Microsoft to get its mojo back, which is a financial term. And so what do you think about IBM finding a way to be relevant in the lives of everyday Americans? Because right now, basically, it's like a consulting firm that sort of dabbles in tech, maybe, but no one's actually using their tech anymore ever since they got rid of the PCs, 20 years ago. They never replaced that with anything else. Am I wildly off base here about that approach to the future?
Well, I just think it's too broad a departure. So IBM is really an enterprise-centric company now, and it's very difficult to turn that clock backwards. And, it's like Accenture. They do consulting for enterprises. IBM sells hardware, software, and services exclusively to enterprise. It typically has a better margin profile. And so, to try and build a consumer brand and a consumer set of products, I just think is too tough to do.
Let's talk a little bit about the person who didn't get the job, and that was the former CEO, Tony, of Red Hat, who's going to stay on now, I guess, as company president. His name is Whitehurst. He had been a favorite in part because he's some years younger than Krishna is, 52 versus 58 or 57, I can't remember 57. Which. Can they be a good complementary team? Krishna was involved in the acquisition, evidently. Can they be a good team, or are we setting up a rivalry that could end in one or the other leaving?
That's a good question. I think certainly on paper and in practice, they have complementary skills. So Arvind is first and foremost a technologist. He, until the last year, never really ran a business at IBM. Jim's background's totally the opposite. He was COO at Delta, and then he's been CEO at Red Hat. And so he's an operator first and foremost. Arvind is a technologist. And so I think on paper, there could be some complementary skill sets. Now, yeah, there's some obvious, sensitivities here. Whitehurst was considered to be a candidate. I think most investors thought maybe the transition would happen later, like at the end of this year, and it would go directly to Whitehurst. He's a very capable person, has been a CEO, has been the COO of a large company. Invariably, he will aspire to probably be a CEO of a larger company at some point. So, whether this can be a nice partnership and then a handoff to Whitehurst over the next several years remains to be seen. I think on paper, the skills are complementary. I think the other thing that's worth mentioning is, IBM and Arvind in particular, they've largely played their hand, and I think this is really important to understand. Arvind was sort of the key architect or visionary behind the Red Hat merger. Obviously, Jim is the CEO. But that is the big bet. They have $36 billion in net debt today. That's outside of the financing business. They don't have a lot of degrees of freedom to reshape the portfolio from a purchasing perspective over the next couple of years. They've made their big bet, and they're going to play the hand of Red Hat likely for the next couple of years, pay down debt, and then there'll be more degrees of freedom. There also aren't a lot of, opportunity, I think, to divest major parts of the business, again, to kind of fund any aggressive set of acquisitions.
All right, I'm going to give Steve the last word on this before we move on to
Tony,
Amazon.
it just sounds like you still got a 135 price target on it. When you're talking about the difficulty they have in moving from enterprise, are you skeptical about their ability to rival Amazon and Microsoft in the cloud?
Yes, I am. IBM will talk about cloud revenues of $20 billion today. The strict definition of cloud, which is what Amazon and Microsoft and Salesforce do, infrastructure, platform, software as a service, they have about $4 to $5 billion a year in cloud revenue, which is multiples lower than those competitors. And so the cloud number that they throw out is software, hardware, and services that are used to help build private clouds of their customers. But the real cloud business is dramatically smaller than that. So there is significant distance. And again, IBM has $36 billion in net debt and $100+ billion market cap, competing against folks who have essentially no debt, trillion-dollar market caps, and cash flows that are multiples of IBM. I'm not so sure I'd make the bet that they're gonna catch up.